Welcome to Markets Now. I'm Michelle Rourke with Joe Kooima with Kooima Varilek. We're seeing some mixed trade in kind of both the grain and livestock futures this morning. And Joe, we've had a pretty tough down week here in the row crop sector. We're trying to bounce a little bit this morning ahead of the reports, but it's really been a focus on weather here, more favorable weather. Is that why we just have pressed this thing into new lows day after day?
Yeah, good question to start off there, and thanks for having me on this morning. Yeah, I think the overall focus has definitely been the timely weather over there, especially on the eastern side of the Corn Belt, continues just to show up as far as the forecast go for rain. Is what they need. Good part of the season for that to happen. So unfortunately, got a trend that's been dominant here for the last little while, and the funds are really starting to show aggression here, especially the last several weeks. Corn, they're net short probably 240,000 corn by some estimations, and they have more room to go if they want to. Unfortunately, and the beans are over 100,000 short there too, with more momentum if they want to. And their ledger every day is showing a positive balance, so they can kind of add on to it. I think they're taking a little pause here today, obviously, with the report here, so they kind of even respect that this report can. You can do all the research that you want, but you can still kind of show up empty-handed at the end of the day there. But we'll see once at 11 o'clock what happens there.
Yeah, and if it's not super bearish, like you said, we've got a lot of bearishness already programmed in. If it's not very bearish, is it possible we could get a little relief rally? It's end of month and end of quarter, for God's sakes.
Yep. I thought about that too the last few days. It seems like the last other quarters and end of the month, you see kind of a relief from whatever trend has actually been happening, but this one's definitely more aggressive. But I would imagine that you see at least a little bit of a pause. I don't know, maybe they're not interested in taking any profit here at the end of the quarter, but with the relentless selling and the exhausted selling status that we have, even a neutral report would probably just provide a little bit of a dead cat bounce to at least get some marketing minds to come up with something here at these price levels.
Another market that we would certainly like to see some end of month short covering or end of quarter short covering is the hog market. It's been a relentless sell-off here. And let's talk about the hogs and pigs report out yesterday, because, let's go through some of the numbers here. All hogs and pigs, 101.3, kept for marketing 96.8, kept for breeding 96.8, and kept for marketing at 101.7. What's your take on that? What did you characterize it at?
I thought it was kind of neutral. I would say that even the bearish part of this marketplace would even maybe question why those numbers aren't higher. I guess with the relentless sell-off that we've had. So we're hoping for maybe a little bit of a different stance, especially with some of that weight breakdown. I thought we'd maybe see a little relief here moving forward, but it didn't show up there. So we're just kind of back to, the trend. I think we're kind of keeping an eye. Well, we are keeping an eye on these weights, which continue to be just elephants over a year ago, 10 pounds or slightly close to 10 pounds over a year ago. I think some of the heat at the beginning of this week did take some weight off, but now we're kind of back to that 70 degrees, 75 degrees. So maybe we aren't going to see such a drop in the weights next week, but I'm watching the carcasses every day to see what those weight breakdowns. I'm seeing a little relief there, but I think that's the next thing is to keep an eye on there. I know back in Dees and in January, isoines were very cheap, easily. You could find them. And then about mid-January, all of a sudden they started to dry up for numbers. Prices skyrocketed pretty good. You couldn't find them as easily as you could 3 weeks ago, or 3 weeks prior to that, I should say. So we're getting to that time frame where I would suggest you start going into some smaller numbers anyway. So that to me is maybe right around the corner.
Yeah, no doubt. But up front here, it looks like any liquidation that we've had has been kind of trumped by some of the better productivity, right? Especially when you look at pigs per litter and whatnot.
Yep. Yeah, that was an interesting notation there. I think some bigger player probably liquidated some sows, and they their production wasn't the best by any means. I think it was holding some of the capability back from the other really good sow farrowers that are out there. So that's why we saw such a bigger jump in some of those numbers with the pigs per litter.
You bet. So overall, like you said, it has been a downhill slide in this market. Do you see this market getting close to a bottom?
I would like to optimism. I would say yes. It is a little bit tough though that you're at the end of June and we couldn't see a bigger cutout rally, and that's because of the weights. So historically, that can put a little bit of a burden here moving into the rest of the year. Just historically, I think numbers can change, but when you look at that, some of that stuff, it is tough for that fourth quarter to really rally, because then you typically do come across more numbers or your demand really slumps. But I guess I'm a little bit more optimistic here. Last year we had I think it was close to over a 50-day slip, a lot of dollars there, and we did recovery, or did have a nice recovery that year too. And this year, I think we're working over close to 50 days now as well on this big slip too. So talk about a market that can trend and can take your breath away. We have it here right in front of us.
Oh yeah, and the funds have sold this thing super hard. You mentioned demand or cutout values. Do you think, or have you been surprised that demand hasn't been better for pork, considering where beef prices are right now?
It's a question that we get daily, but and maybe it's more local here. But you open up the grocery store, the advertisements there. It just seems like the products here just stay the same. Whether the pork cutout was 110 or when it's down to 93 now, it just seems like nothing changes a whole lot on the consumer end of it there. So I think maybe that's just kind of the easy part of that question to answer in that way.
Yeah. And again, hogs have been seeing a little pressure here this morning. Let's hope we can get some end of month, end of short covering there at some point here today, maybe.
It'd be nice. It's a disheartening kind of a move, because in the last several weeks we have seen a key reversal higher, and even a gap up and over a downtrend line, but we just can't get any follow through with the fundamentals and the cutout. So it's a very disheartening when you're looking at something technically, that's for sure.
Absolutely. And on the flip side of that, the cattle market has continued to kind of bump into these new highs for the move, and all-time high there for the spot month in the June. But what are you hearing about cash trade? We haven't had a whole lot. Do you expect we're going to be higher again this week, Joe?
I wouldn't think so, especially when you got June, at this price level of 194, 193.95 type stuff. Then the South, I think, can say, hey, we want a little bit better price than what we've been receiving the last little while, because this market always dictates the futures off of the lower of the two between the North and the South. I think up in the North, are we expecting it to be higher? Yeah, we should. And I think we have the leverage and the capability for that to happen. Our show lists are not burdensome. You can pass and the packer's going to come back and say, hey, what can we do? We're very current. A lot of the cattle that's been sold the last several weeks are shipped off within a week almost there. So I'm seeing some initial bids this morning in the South at 188. It was quietly 190 last week, but you got 3 packers bidding 88 down there. So it's good to see such an aggressive auction happen like that. And the more bidders you got there, you're looking around, the better leverage that we have.
And once you get June off the board, you've got a discount in those back months again. So, that's been kind of the MO of that market, hasn't it?
Right. It makes it difficult on our end to come up with a marketing plan, because obviously we're probably not going to see those markets come up to where the cash price is at. I mean, there's still some put options the guy can utilize. This basis up here in the North, I think, can kind of stay a while, but we're gonna, June goes off. We got August next week as a lead month. We're just gonna have to kind of take a stance here and say, okay, where is August comfortable, with a basis play? So we'll have to see what the South kind of trades this week. If they are going to be back, to 190 or more, maybe we have August, maybe just hang out here. It's not that I'm necessarily bearish of, because of the discount, but at some point, basis still is going to be a true thing here, probably for the next month yet, I would say.
Yeah. And if we don't get any more end of month, end of quarter profit taking than what we've saw, that really shows how good this market really is, don't you think?
Right. Right. You got the open interest is back over 300,000. I think the funds have kind of came in here. They're not afraid to buy into new contract highs or sharp rallies. August has rallied over $11 here the last 2.5 weeks without a big significant break. But that they like that stuff. That attracts them to get in a market that's moving pretty good.
All right. Well, thanks as always, Joe Kooima with Kooima Varilek. That is Markets Now.